Financial advisors charge between 1 and 2% of your portfolio every year. On a $100,000 portfolio, that is $1,000 to $2,000 per year. For advice you could get from a spreadsheet, I wanted to test something. What if I replaced my advisor entirely with an AI? Not a robo-advisor that charges you anyway. A real AI. One that reads the market, makes decisions, and costs nothing. Here's what happened. First, let us be honest about what a financial advisor actually does. They assess your risk tolerance. They suggest a portfolio split between stocks and bonds. They rebalance once or twice a year. Maybe they do some tax loss harvesting. That is it. The average advisor charges 1.2% annually. On a $250,000 portfolio, that is $3,000 a year. Over 30 years with compound fees, that 1% adds up to over $100,000 gone. Here is what I built instead. 3 tools, all free, all open source. First, Kronos. The same AI from my previous video. It predicts 30-day returns for any asset. Second, Finance. Free market data going back decades. Third, a simple Python script that takes Kronos predictions and allocates capital proportionally. The total cost, $0. The time it takes, 5 minutes a month. Let me show you the numbers. I ran a backtest comparing 3 strategies over 10 years. Strategy 1, the classic advisor portfolio. 60% stocks, 40% bonds, rebalanced annually. Strategy 2, 100% S&P 500, no changes. Strategy 3, the AI approach. Kronos predicts monthly returns, allocates to the top 3 assets from a basket of stocks, bonds, gold, and crypto. Here are the results. The advisor portfolio returned 7.2% per year. After fees, 6%. The S&P 500 returned 10.8%. The AI approach returned 14.3%. But here's the catch. The AI approach had higher volatility. It swung harder in both directions. The Sharpe ratio, which measures risk-adjusted return, was actually best for the plain S&P. The AI won on raw returns. The index won on consistency. But the real comparison is not just returns. It is what you pay for them. The advisor charges $3,000 a year on a $250,000 portfolio. The AI charges nothing. Over 30 years, the advisor costs you over $100,000 in fees alone. The AI costs you 5 minutes a month. That is the real math. Not which one earns more. Which one earns more after what you pay for it. Now, to be fair, there are things a human advisor gives you that AI does not. Emotional support during a crash. Accountability when you want to panic sell. Tax optimization that requires actual knowledge of your situation. Estate planning. Insurance reviews. If you need someone to talk you off the ledge when the market drops 30%, an AI will not do that. A human will. So should you fire your advisor and replace it with AI? The honest answer is it depends. If you are disciplined, data-driven, and comfortable making your own decisions, the AI approach saves you a fortune. If you need hand-holding, emotional support, or complex tax planning, keep the advisor. The best approach might be a hybrid. Use AI for predictions and allocation. Use a human advisor for the stuff that actually requires a human. If this changed how you think about advisors, subscribe. I test financial strategies with real data every week. Drop a comment if you want me to test a specific advisor strategy next.